I'm Greg Hunter. Welcome to USAWatchdog.com. A few weeks ago, the geopolitical and economic cycle, renowned cycle expert, Charles Nenner called me and said, "Hey, listen, you need to get me on soon. My war cycle has turned up and my market cycle has turned down." And so he decided to come on after the close of today, after this 400 and plus market rip. And sure enough, his market cycle did turn down. I mean, it's 400 points down. Of course, one day does not make a market. But Charles Nenner, thank you for joining us today on USAWatchdog.com.
Nice to be back.
Well, what's going on? I mean, we had this big sell-off. It's amazing that you called and said that. You also said that gold would be going up. We'll talk about that just in a minute. But what's up with the markets? What are you seeing right now after this big, monkey hammer on the stock market?
Well, first of all, our high for the year was 3370 on the S&P. I don't think we can go above that this year. Second of all, I have to go a little bit back and explain what we do is we have the assumption that things don't happen at random. If markets move at random, then you never know what you're going to do and how to invest. So that we can push aside. The only way to understand how markets function is if they don't move at random. Now, I've been talking about this a lot, and I mostly gave up because it's very difficult to get the ideas across. But I got a bit inspired because Professor Sheila just published a book called Narratives. Sorry, I'm from Holland, but I tried to pronounce it rightly. I didn't read the book, but on his television presentations, I understand that he says narratives are more important than fundamentals. Well, first of all, that's what I've been saying for 10, 20, 30 years, especially when I was at Goldman Sachs. But it doesn't get us further because if you don't know what the narratives are, then what are you going to do? So what I always said is, of course, the narratives and interpretation of facts are important, but you want to know when it happens. So we're one step further. That a professor, there was Nobel Prize winner, says, maybe it's not only fundamentals, it's narratives, and that can move markets.
But now, let me make sure I get this right. The relative data, is that what you're talking about?
No, he talks about stories that come up in the market. Narratives.
Narratives.
Not relatives.
Narratives. The narrative of the market. Got it. I'm sorry, I don't hear that well, and so it's not just it's the narratives of the market that are important. Okay, so where are we now with the narrative of this market?
Well, I don't know where we are, but the thing is, if you don't know when they're coming up, the narratives in the market, it doesn't help you. So it's the first step in the middle. So I now intend to talk again about my cycle work, not only with you, with other media, and try to explain that. Try not to understand why markets go up or down. Try to understand when they go up and down. And that is much more profitable than going and listen to all the media that explain to you why. So a lot of warning signs there were. For instance, what I published is that most small investors are bullish and super bullish. I think the most bullish in 20, 30 years that I've ever seen. Second of all is my price target for this year was almost reached. I think the high was 33.50 or 60, so another 10 S&P points. It will be very surprising if we get above that the whole year. And then you get to other fundamental stuff like PEs or whatever. But the cycles that have been up since the beginning of 2009 were topping. So it was not time to be in stocks. So we didn't have stocks. We only were long VIX that we sold today. And we are invested mostly in bonds. And we were invested in silver and gold. We took some profits today, but I think we go much and much higher the next couple of years. The problem for the individual investor is that most media talk always about stocks. So everybody's watching the stock market. Well, it's much safer to trade other commodities and other markets. So that's what we're concentrating on. Now, what are we going to expect? I expect to see a little bounce tomorrow, maybe 1.5 days, and then sell off again. If we see a good close on the S&P future for March below 32.30, that's only a couple of points away from here, then we get lower price targets. And then this could turn into something much more serious. If not, then based on the huge upside momentum, these bull markets with such a big momentum don't stop on a dime. We go up and down, up and down. There are always people who think it's a buying opportunity. Until until we're finished with that, and then we'll go down. But this market will go down in a strong, strong way.
So overall, whatever the little blips and blobs, and you might have this or test that, but you think that we've topped, and the market is definitely on a downward trend.
I say we approached maybe missed about 0.5%, my price target for this year already, very early. And even if we go up there, it's time to sell if we didn't sell. We totally out of stocks.
Totally out of stocks.
Totally out of stocks.
So you're not going to wait for an extra percent or two or a bounce. Your idea here is, listen, the cycle says we're at the top. There's not a lot money to be made, but a lot to be lost. Is that what you're saying? Explain that, please, for me. I don't want to put words in your mouth.
Well, there's a difference between insiders and small investors. Small investors feel bad if they miss another 2-3% on the upside, while the more a bigger investor is afraid he can lose 40% on the downside. So I'm afraid I can lose 40% on the downside. So I don't care if it goes up one more time, 3-4%. I'm standing aside until I see something totally different. Now, what could that totally different be? That could be a blow up, like we saw maybe two times in each 100 years of Wall Street. So that's very exceptional, but it's possible. So I exactly have my indicators already pre-written. My subscribers know that when we're looking for blow up, which I give only 5 or 10%. But if there's a blow up, then we want to participate, but I wouldn't count on it.
You think the chances of it going up from here are 90% against? You're about 90% against the market going up from here.
Yeah, only 5% that there could be a blow up. That means what's a blow up? Means that everybody's getting totally ridiculous and nothing counts anymore, and you just buy because tomorrow is going to be higher. That happens once every 100 years. It's possible, but normal money management cannot count on that.
All right, I want to move on. One of the things that you also said, this is 4, 5, 6 months ago you were on, and you were. The Treasury, the 10-year Treasury had gone up. The 30-year Treasury had gone up. Now it went up to 2.5, 2.6, something like that. The 30-year, and it's down to 2. The 10-year is down to about 1.6 for 10-year money. Of course, the 1 month is 1.5, so which is kind of kooky. And your trend for interest rates is you called it. You said, I think there's going to be another mini bond bull market. Something to that effect, and not exactly. I don't want to. But you said rates would be going down. What are you saying now?
The same thing. I think we're a bit close to a short-term cycle top. I see the long bond is above 162 today, but this is going to continue for most of the year. Again, we don't know what the news is. It could be a rush for safety. It could be a recession. Who knows what it could be? Could be deflation. My work is to tell my clients what's going to happen, and later we figure out why. I personally, because you maybe remember my crude oil target is as low as 36. Natural gas was already collapsing. I think we're going to have a deflationary crisis, and that's why interest rates will even go much lower. Now, I was just offered for real estate in Amsterdam a mortgage for 0.7%. Can you believe it? 0.7%. I have to pay for an amount of more than 10,000 euro in the bank. I have to pay because interest rates are below 0. So we're in a total new situation, and I don't think anybody fundamentally can figure this out. So you have to work with cycles, because otherwise you get hurt, because nobody really knows what's going on. Now, one extra thing I want to mention, which most people don't know, is the Federal Reserve is independent. The Bank of Europe is not independent, which means is the Bank of Europe can go in bankruptcy. I don't think anybody realizes that, but it's something we have to keep in the back of our mind.
While we were talking about banks, I asked you to do some cycle work on Deutsche Bank. And you'd come on and said, if it gets to 8, you should start worrying. And then later you came on and said, well, I did some cycle work, and if it gets to 640, it's going to go to 0. And
that was...
That's right. And then it got to 644. It was like throwing a ball on a concrete floor. Boing, and it bounced right up. I mean, you got it within 4 cents of it going to 0, basically. You said we're going to 0. Now it's in the 8s. Deutsche Bank, are they out of trouble? Are you still You're not very hip on Deutsche Bank because the chart looks awful. Is what you told me. What are your thoughts on Deutsche Bank? Even though it's come
Well,
off your
to be honest, I did the research because he asked me to. I haven't looked since then. I haven't looked for half a year to Deutsche Bank. So next time I'll be prepared and I'll look at Deutsche Bank.
okay. That fair enough. Fair enough. But you were just so you know. I mean, you said 640, and at 644, boing, ding, and it went. So maybe somebody's watching this newscast that has a lot of money and power. I don't know. Let's move on. So let's go back to gold. One of the things you said, and we were floating around, several months ago, we were floating, kind of languishing in the, I don't know, below $1,500. You said, we think gold and silver is going to go up. Now, you just said you took some profits with gold and silver, but yet you think it's going to go much higher. What's your story and CycleWorks say about gold and silver for investors?
Well, cycles show me that gold and silver going up for a couple of years. So I just gold does sometimes $100 down. Also, silver is volatile. So what I do is I stand aside, and then when the cycle bottoms again, I get in again, not forgetting the long-term picture. Now, I just want to warn people for the long term, because my experience is that if, let's say, gold is at 1580, and I would say, listen, I take some profits that are short on top, then people say, oh, you know what, I'm going to be there for the long term because Mr. Nenner says it goes to 2,500. The problem is, if the cycle works, and it usually does, we go to 1815, 1814, 1820, 1419, 1470, and suddenly they get afraid and they sell out, and no more long-term investment. And that's my experience with most investors. So that's why we do the work, and we say, listen, we take all the emotions out, because I know when it goes down too much, you forget about I'm in there for the long term. Because the whole family says, why don't you take profit? You still have to take profit. You still have some profit. So I still urge people to take a look at the cycle work and just get out when there's a cycle top and get in when there's a cycle low.
Okay. Well, that's more of a trading mentality. With all the what the Fed is doing is in the repo market. I just had Martin Armstrong on, another cycle expert, and he says, they're trying to keep interest rates from rising, and it looks like they're winning. According to your chart work, they're winning. They've driven rates down.
Yeah, but they're winning, but they're ruining every system that we have built up for the last 50 years.
So at some point do you see them losing? At some point do you see your CycleWorks show, oops, is there a big problem coming up in a year or 2 or 6 months or whatever, and rates are going to skyrocket? Alan Greenspan warned about a spike in the interest rate markets just a few years ago. Interest rates, what's your longer term prognosis for that?
Well, first let's just mention one thing. So I'm from Europe, and the law is that pension funds have to be 60-70% in bonds, and the rest they can do stocks or whatever they want. The problem is they get 0%. So people are not going to get the pensions. There will not be any buying power. The consumer is going to drop that. And I see the same happening in the United States. I mean, people that thought they're safe and they have the money put aside, they have to start working when they're 80 years old. So the Fed could maybe succeed in what they do, but they're bringing down the whole system.
Ooh. So you think the Fed is succeeding in, for sure, bringing down the whole system?
Definitely going to, I don't think it's their fault. I don't think they can do anything here. I'm again against the cycles. He can't do anything. I also think the market forces the Fed to make decisions about interest rates. So they don't have a free choice about the interest rates. But it looked nice, but take a look what's in Europe. It's a catastrophe over there.
Yeah. It's they say that it's the worst is yet to come with the negative interest rates, is what I've been reading.
Right.
And you're at the epicenter, at your home base in Holland. You're the epicenter. They think it's going to get worse. Explain what worse looks like.
I don't know what worse looks like. That everybody takes his money out of the bank because you have to pay the bank to keep your money and put it under the mattress again. I don't know what's going to happen.
You think times are going to get worse, not better?
Yeah, things definitely, because listen, we had an economic expansion that reached maybe 2.5%, not the 6-7% we usually have. Now we're turning down. So definitely when we come down from 2.5%, we're going below zero. We don't have interest rate like Fed funds like 7-8%. We got them, 1.5, 2%. So it definitely will go below zero. And we're going to have deflation. And who knows where this is going to end?
Oh boy, that's Let's go on with one of the things you talked about. It was a few weeks ago, and it seemed to have died down. But the cycles are, as I'm learning from you, are you can't look at little bitty snippets of the cycle. You got to look at the cycle. And you called me and said, "Hey, the war cycle has turned up." Explain.
Well, first of all, before I forget, you remember a couple of years ago, I said the internal war cycle is more frightening than the external. I said also for the United States, we're going to have such a social unrest and uprising that's more dangerous than the United States going to war. So what you see is if you have stock markets that are topping, you see one day this stock goes down and one day that stock goes down until the whole thing comes down. What you see is that you got a war over here, you got a war over there, you got the Turkey going to Libya having a war, everything is in uprising, and that is not coming out of the blue. That's based on the cycles. What we're looking for is the big war that still has to come. And as you remember, I still said I don't think it comes in the Middle East. I think it comes in the South Sea around China. It doesn't have to be China in that environment. Just because it's time. Now, it's very strange that it's time, but also wars and consciousness of wars have a certain period for people to forget, and then I start anew. As I'm now doing research on this new virus, because you got the Asian flu and all this SARS flu and everybody knows. So I'm putting it in a computer and to see if it was really time for a new epidemic, because the cycle is like that. So all these things can be expected, and you can take care of it before it happens. Now, question is, and it's a philosophical question that people ask me, so what do you do if nothing can be changed? Well, if you know after the summer comes the winter and comes the summer, you can change it, at least you can buy a winter coat. That sounds funny, but at least you can do something if you know what to expect. So there's a lot to expect. There's a lot of unrest to expect in the United States. It seems for me as a foreigner that they cannot be fast enough to destroy this country. It's really amazing what's going on. And let's hope that everything will come down one cycle bottom, but it will take another 10 years.
So you are more worried at the moment, at the absolute moment right now. You are more worried about the internal war, civil war in the U.S. right now. That's where you think there's more danger in terms of your war cycle at the moment. Is that right?
Yeah, because there's a 60 years of unrest, and the last one was in the 60s, as we know. And now it's time again for social unrest. Just with the media getting everybody excited, it could be on a much broader scale than a couple of students protesting in the university, and most of the Americans don't know what's going on.
And then your bigger picture, your bigger war cycle, you think that is going on simultaneously, or the one for the Civil War cycle is going to end, and then the bigger war cycle is going to take over?
No, all the cycles are up. You remember we talked about it, that I wrote down now this war cycle is straight up.
That's
and
right.
3 days later, there was the attack on this Iranian general.
Correct.
So you can make all philosophy. Did Trump have a free choice? Not a free choice. It's a philosophical problem in the West to think that way. But especially financial markets try to think that way. It's very profitable.
Where do you think that the market will end up this year? They have an old saying that, if you have a bad January, that's the way the market ends up in negatively. Do you think the market's going to end up negatively this year? Well, obviously, you're out of stocks. So how bad is it going to get is the question then.
Well, what I do is I know when a cycle top is, when a cycle bottom is. I know what the upside target and downside targets are, but it doesn't have to be the end of the year, so I cannot respond to that.
But for the time being, I mean, I guess it says it all. You are advising your clients, get out, run, Forrest, run. Is that right?
As long as we don't get S&P really much above 3370, we're not going back in.
Oh boy. And gold, where would you get back in? You said you took some profits at gold because you were buying it, I don't know, I guess in the 14s. Where would you go back into gold?
I have to take a look. It sometimes can be only $40, $50, but it takes the emotion out of investing, and people have more fun. So even for $40, $50, we stand aside.
And if you're a long-term investor, if it goes down $100, you're saying don't worry about it. If it goes down $200, don't worry about it.
Yeah,
Don't worry
but
about it.
my experience is they start worrying when it goes down too much, and they forget that they're in there for the long term. So if you're strong enough, go to 2,500, but never get weak, even if it goes down. Then you're a long-term investor.
And you're thinking, what's the price, the date target for $2,500 gold? What do you think that will be?
Well,
And can it go higher? $2,500
yeah,
gold.
yeah,
Okay,
it could go higher, but this could take 3 years.
$2,500 gold could take 3 years.
Yeah.
And then how much higher could it go? Is your chart work saying? How much higher could gold go?
Well, I made a calculation. If we ever break down the financial system and we have to go back to the gold standards, if that would happen, then gold would be now around $60,000. So if they ever would decide that, who knows what's going to happen?
And what about wow? Well, that sounds like a crazy calculation, but Jim Rickards has come up with 80,000. Bill Holter said if you just look at the outstanding debt, not all the stuff that's hidden, you get 87,000 in terms of all the debt that's out, the 23 trillion. Jim Rickards says, if you're back, depending on what you want to do, 80,000. These are just, so this is not crazy time. But you're saying that if it gets bad enough, you could see gold in moonshot territory.
Yeah, but it has to go back to the gold standard. But for the moment, I would just all want to mention we have big fun with the Bitcoin, because the Bitcoin doesn't have much to do with fundamentals. So only cycles and price targets. It's not that there comes out a fundamental report that could have any influence. So it's the biggest fun is the Bitcoin, because that's the easiest market to trade at the moment. Now, I don't know about Bitcoin. I don't buy Bitcoins myself, but we analyze these funds through the Bitcoins, and it's really fun to trade the Bitcoin.
You think that Bitcoin is going to up or down from here?
Well, right now cycles are topping. So today was 8,800, and we took profit again, and we wait for the cycle to bring it down again. And it works like clockwork orange, because again, there's no analysis and no fundamentals. Nobody's going to bother us with any story, derivatives, if I say it correctly, and it's purely cycle work.
The silver. People are probably sitting there going, "What about silver? What about silver? What about silver?" So, what about silver? What do you think's going to happen with silver? What are your cycles?
I think silver is going to outperform gold for a while, but again, not yet. Not yet. It's a bit toppy right now. And again, we took silver. We took also some profit overnight on silver.
You mean it'll outperform gold on a percentage basis?
Right.
And how high do you think silver could go?
I did not calculate it. I'm sorry. I didn't know that.
Okay, that's fine. But you think it's going? If gold goes to 2,500, it's going to be along for a wild ride.
Right. But I think it will go faster than gold. It will outperform the next year and a half. It will outperform gold.
Okay, and for all the investors out there thinking they're just going to buy and hold for the long term in the stock market, your advice for investors now, after this big 400+ point monkey hammer on the Dow and the S&P and Nasdaq, and they all got the Russell, they all got creamed. What would you tell people waking up on Tuesday? What would you do for the rest of the week? For the rest of the week, what would you tell people to do in the stock market?
I think you get a small bounce next week, so I will take an opportunity to sell some stocks and take a look at our research. There are other ways of making money, and don't listen to the media, because I watch this and I write down how many people are bullish and bearish. And even Mark Cuban, I don't know how he made his money. He was lucky in the internet bubble, and he is now the expert of saying the markets will go much higher. They bring them from everywhere just to get people drawn into the stocks. And that's not the right way to do it.
And your market research says not going much higher. There's a small, tiny chance, but the bigger chance, 95%, it goes much lower.
Right. This is not the time to be long in stocks.
Do you have a trial subscription service on, it's charlesnenner.com, that's your website. It's the Charles Nenner Research Center. Do you have a trial subscription service, or don't you have that on your site? Do you still offer that?
We still offer that 4 weeks or 6 weeks for free, and a special price for people who say they come through you.
Just mention USAWatchdog.com or Greg Hunter.
Yeah, they always get a big discount.
Okay, fine. You don't have to do that, but that's very kind of you. I'll put the link up for your free trial subscription. I'll put that up. I'll put your research, lots of information, interviews, information, analysis that you put out there for people for free. Charles Nenner, thank you for coming on at a pivotal time for the markets. I just really appreciate you coming on. Charles Nenner of charlesnenner.com, world-renowned geopolitical and economic cycle expert, who's right a lot, by the way, and been right here on this air. Thank you, Charles Nenner, for sharing your brain power on USAWatchdog.com.
We'll be back.
I hope so.